Are they getting internal reconstruction? Internal or reconstruction. Before we begin with internal reconstruction, let us understand everything or every topic as a small concept. If we understand accounting is only a debit and credit, it is only a debit and credit. What do you mean by reconstruction? Construction, something new is done. That is called as what? Construction. What do you mean by reconstruction? Some old item was there, we reconstruct. That is called as what? Reconstruction means some alterations are done. Alterations are done, additions are done, or removal is done. That is called as which one? Reconstruction. What is it? Internal reconstruction. Internal reconstruction means we are not going to change the name of the company. We are not going to change the brand name. We are not going to change any external character of the company. Internally, we are reconstructing. Internally, we are reconstructing. Pay attention. When will we reconstruct? When something is going good or when something is going wrong? 99% of the cases when something is going wrong only we will what? Reconstruct. Reconstruction also happens when there is a big profit, huge profit. When you're not able to manage as a single company, you will split into two companies, etc. Okay, reconstruction may happen in case of profitable situations also. But generally, reconstruction happens when there is a heavy loss or something when it is not going good. Okay, listen, let us assume you are running a company called ABC Limited. It had existence for the past 25 years. 25 years the company is there. Okay, for about first 15 years, we had all the goodwill. What do you mean by goodwill? All in India knows about our company, knows about our product. We are having a very big sales, wonderful sales. We had achieved a lot of turnover and other things. Okay, big turnover was there. Okay, big profits were there. Everybody was happy about the product. Everything was good. Everything was good. First 15 years. For the past 10 years. For the past how many years? 10 years. The business is not doing good. Slowly it came down. In 5 years, we became a zero profit company. Next 5 years, we are suffering from loss. We are suffering from loss. First 15 years, wonderful. Next 5 years, zero profit company. Thereafter, for the last 5 years, we are running at a loss. When the company is in loss for about 5 years, what will happen? What will happen? P&L account will show debit balance. Profit and loss account balance will show which balance? Debit balance. Why debit balance, sir? Profits will have credit balance. Losses will have which balance? Debit balance, number one. Number two. Since you are running business at a loss, whether you would have paid salary properly or rent properly, taxes will not come because it's a loss-making company. Okay. What about interest on loans? We are in loss. Where we will have cash to pay the interest. Interest will be outstanding. Dividend to preference shareholders will be outstanding. Losses are accumulating. What to do now? First option is close the company. First option is which one? Close the company means sell it to somebody. Then internal reconstruction will not happen. Internal reconstruction will not happen when you are selling the company to somebody. When internal reconstruction will happen? When you want to run the company. First option is close the company. Then no internal reconstruction. What is the second option? Go for internal reconstruction. What do you mean by internal reconstruction? Simple. Altering within the company certain things and trying to run the company profitably. Internal reconstruction has many phases. One is you have to go for why we are running at a loss. Basically, people don't like our products. So change products. What do you mean by change product? Change the packaging style, change the taste, change the external aroma, change the the fashion at which it is delivered. Okay, change the product. Okay, reconstruct the product. Thereafter, we reconstructed the product. Will it go well? No. It is about people who are managing the product. We call it as human resource reconstruction. For example, when a college is not doing well, what is the reason? Is it because of building, chair, desk, table, or is it because of human resources? Right from secretary to the principal to the teachers to the non-teaching staff, if everybody performs well, a school or college will do well. If they're not doing well, whatever will be the chair or bench or desk or class, it will not do well. So change the human resources. Change the human resources. Product reconstruction panano, then human reconstruction panano. Then next one is plant reconstruction. What do you mean by plant reconstruction? Our products are sold to the customers. Customers return it as a damaged product, defective product. Why? Machine is not good. Machine is manufacturing defective products. When we manufacture a shirt of 42 size, something else is going to the customer. The pocket is not in proper shape, collar is not in proper shape, the quality is not in proper shape. Why? Because of the machines. So reconstruct the plant. What do you mean by reconstruct the plant? Remove the old, old technology machines, bring the new machines. Okay, change the layout of the plant. Change the layout of the plant. Okay, so you have to do the plant reconstruction also. Then you have to go for marketing and promotion reconstruction. Marketing and which one? Promotion style you have to change. For example, first 15 years, our company used to give newspaper advertisement. That's all. Now also the company is giving newspaper advertisement. Who's reading the newspaper? No, lot of things have changed. Clear? We use a lot of artificial intelligence to track our customers, then give them, for example, when you open YouTube, for you advertisement will be different. For me, advertisement will be what? Different. So marketing and promotion mix has totally changed. Clear? So you have to change this also. So reconstruction does not mean only financial reconstruction. All these reconstruction will do. Okay, this is not our classroom learning. In the classroom, we are to reconstruct product, human resources, land, or marketing. We are not going to learn. What we are going to learn is, for all these things, what do you want? Money. For all these things, we want to change the product. We want to change the human resources, bring new employees, purchase new plant, marketing. Let us introduce new methods. For all these things, what do you require? Financial reconstruction. Financial reconstruction. In the classroom, we are going to learn about which one? Financial reconstruction. What is financial reconstruction? Let us learn. Let us assume that group is equity shareholders. Who are they? Equity shareholders. Second group is preference shareholders. Third group is unsecured creditors. You have given the money, but there is no security with you. Fourth group is secured creditors. Okay, who are the four groups? Equity shareholders, preference shareholders, and which one? Unsecured creditors, and which one? Secured creditors. Now first, we'll call for equity shareholders meeting. We'll call for which one? Equity shareholders meeting. In that, let us assume I am the MD of the company or chairman of the company. Will I come and talk? I will not come and talk because they will kill me. Why? I am running the company and the company is running at what? Loss. So I will not come and speak. I will bring a person who is financially strong, at the same time communication wise good, and very good psychological person. Very good psychological person. Three knowledge should be there. What are the three knowledge? Financial knowledge, communication skills, psychologically you should be able to persuade people. There are some good people are there. Clear? So bring them and speak to them. Ask them to speak. What they will speak? They will talk about past glory of the company. Company run 15 years back, it was running very well. People were happy, shareholders were happy, we were all enjoying profits, etc. and all. Something happened in the past 5 years, we are running at a big loss. They will explain like anything. Then they will tell, okay, we have run the company for about 25 years. Okay, if we close the company today, the company is in total loss. Money will not be even sufficient to pay debentures, creditors, and preference shareholders. You will all get nothing. You will all get nothing. Instead, you have all invested 1 crore shares. How much? 1 crore shares of rupees 100 each. That is a paid up capital. 1 crore shares of 100 each. How much? 100 crores is the paid up capital. How much paid up capital? 100 crores of paid up capital. Okay. If the company is closed today, how much you will get? Nothing. Why? We have to pay first money to debenture holders, secured loans, unsecured loans, preference shareholders. Only at the end you will get the money. You will get nothing. Shall we close the company? I'll ask question. What you will ask? What you will say? No, if you close, you will get everything. You lose everything. So what you do is sacrifice 80%. Sacrifice what? 80%. Sacrifice what? 80%. Will you sacrifice? You have to sacrifice. Otherwise, we have to close the company. If you are not ready to sacrifice, next option is let us close the company, which means you will get nothing. You want nothing or something. Remember, simple. You are riding in a Rolls-Royce car. A thief comes, okay, has a gun on you and asks for, give me the Rolls-Royce with all the money, leave you alive. Otherwise, I'll kill you. Obviously, we want something. So, equity shareholders will sacrifice. What if equity shareholders are not sacrificing? Equity shareholders ready, sir, I'm not ready to sacrifice. What will happen? You have to wind up the company. Then you lose everything. You lose what? Everything. 99% of the cases, equity shareholders will agree. Simple. Your share value, 80% sacrificed. Your share value will become 1 crore shares of how much? 20 rupees each. 80% sacrificed. 1 crore shares of 20 rupees each. It will become how much? 20 crores. So how much foregone by equity shareholders? Foregone means sacrificed by equity shareholders. 80 crores sacrificed by equity shareholders. 80 crores sacrificed whom? By equity shareholders. Next, convene preference shareholders meeting. Convene which meeting? Preference shareholders meeting. Let's assume preference shareholders have invested about 50 crores. 50 crores of capital. They are having arrears of dividend for the past 5 years. 5 years we are running at a loss. Arrears of dividend over 5 years. That is coming to another 20 crores. What is the money due to preference shareholders? 70 crores. Can we threaten like equity shareholders? They will say, okay, you close the company, we will take the money first only, then money will go to what? Equity shareholders. Here you adopt different strategy. People also like that. In some cases, we threaten because when a small wala comes or a weak person comes, we threaten. Okay, when an equal opponent comes, we will see, okay, whether he will win or we will win. Thereafter, what will happen? Okay, we will request. Okay, see, 50 crores irukku. Arrears of dividend 20 crore. Arrears of dividend mattu vittu kuduthurunga. Just leave us which one? Arrears of dividend. Preference share capital we will convert into equity share capital. Preference shareholders, you will become which one? Equity shareholders. In future, we will earn good profit. You will all enjoy good profit in the future. So, but equity share capital or 20% vittu kodunga. 40 crores. Get equity shares worth how much? 40 crores. Request them. They will agree. Okay, let us become equity shareholders. These people are going for new project, new products, etc. and all. In future, if profit comes, we will have more market price. We will gain, etc. and all. They will accept. Now, how much preference shareholders waive? 70 crores total due. Adula 20 crore dividend. Capital or 10 crore waive பண்றாங்க. எவ்வளவு waive பண்றாங்க? 30 crores waive பண்றாங்க. 30 crores waive பண்றாங்க. So, equity shareholders gave up 80 crores. Preference shareholders gave up how much? 30 crore. Next year meeting? Unsecured creditors meeting. Unsecured creditors meeting. What do you mean by unsecured creditors? What do you mean by unsecured creditors? Given loan to the company, but there is no collateral. You have given loan to the company, but there is no collateral. It is like giving a loan to a relative. It is like giving a loan to a relative of 10 lakhs. Next time, a relative will walk with all pride. Those who borrowed money. The person who gave loan will hide. He will ask next loan. Okay, if you go in front of him, will he repay the loan? Ask for next loan. Ask for next loan. So we will hide. So you are an unsecured creditors. You have given loan, but you don't have any hold on us. You don't have any hold on us. Okay, even if you go to the court, court will take 10 years. By the time you will die. Okay, court will take to decide 10 years to pay you all those things. Clear? So what will happen now? So unsecured creditors, you don't have any security. 30 crores irukku. Now we will ask, sir, give us discount so that we will take a new loan and settle your loan. We will take a வேற ஒரு இளிச்சவாயா வருவா அவங்ககிட்ட லோன் வாங்கி உங்களுக்கு செட்டில் பண்ணிடும். Give us some 40% discount and we'll pay you immediately 18 crores. We'll pay you how much? 18 crores immediately we'll pay you. Will you accept? கிடைச்சா போதும். கிடைச்சதெல்லாம் லாபம். Okay, you will accept? Will you accept? Yes, you will accept. So how much you are giving up? 12 crores. Sir, இது நியாயமா தர்மமா? இல்லதான். But வேற வழி இல்லையே இப்போ. 30 crores you are getting back only 18 crores. If you get it today, 18 crores. If you say no, No for internal reconstruction, then wait for 10 years, wait for court order, court will come and pay you the money. Then you may get nothing also. So better to get something today. So 12 crores you will give discount. Look at equity shareholders gave up, preference shareholders gave up, then who gave up? Unsecured creditors gave up. Then go to secured creditors. Go to secured creditors. What do you mean by secured creditors? Debentures, loan holders who are having security on land, building, etc. and all. If we are not paying, they can sell land, building and take it. It is like we going to WWF, I mean maybe wrestling with Rock or Undertaker and the Madri. What will you do? Nera call undru. Okay. Enna pandrathu? Sir, we are not able to pay. Please don't ask us money. Don't go to the court and take our land, building and all. We will not be able to run business. Yes, we have to pay interest. We have to pay loan amount. Everything we will pay in the future. Everything we will pay in the future. 20 crores loan is there. How much? 20 crore loan is there. 2 crore interest is there. 2 crore interest is there. Beg them. Okay. Request them to waive this interest alone. So they will waive which one? Interest alone. Maybe you can get 2 crores from them. Don't expect 80% like equity shareholders. They will not sacrifice. Maybe they will waive which one? Interest. Look at people forego money. Who forego money? Equity shareholders, preference shareholders, unsecured creditors, something from secured creditors foregone. Look at the money foregone. 80 plus 30 plus 12 plus 2. What is the total? 134 crores of money. 134 crores of money waived by liabilities. Waived by liabilities. When a liability is reducing, is it a gain or loss for the company? Gain. Using this gain, we'll write off the losses. Using the gain, we'll write off the losses. Using the gain, we write off the past losses, assets, unnecessary assets, etc. and all we'll write off. This is part 1. This is which one? Part 1. Please remember, so far no money came. So far which money came? No money came. Then what to do is go for a fresh issue. What do you mean by go for a fresh issue? In the share market, issue fresh shares and collect money. And go and approach banks and try to get extra loans. Try to get which one? Extra loans. There is something called as BIFR. Board for Industrial and Financial Reconstruction. BIFR. You give your company and give the projects. Though your company is a sick company, BIFR will give certificate. Okay, the company is a sick company, but based on the projects and undertaking that is given to us, the company is there is a possibility of earning money in future. If BIFR gives green signal, what do you mean by green signal? The company can be run profitably in the future or green signal kurta, what we can do? What we can do? We can get loan. We can get loans. We can get loans. Industrial loans we can get. So try to get loans. Try to issue new debentures. Try to issue which one? New shares. Try to get money and run the company. Run the company. This is internal reconstruction. Wait. Because of the internal reconstruction, whether company name will change? No. Whether shareholders will go out? No. Whether the board of directors, etc. will change? Whether anything will change with respect to external character of the company? No. Internally we alter. Internally we alter. That is called as what? Internal reconstruction. Clear? So for all these things in the classroom, are we going to decide internal reconstruction or record the books? Are we going to decide about internal reconstruction? In the classroom, how to internally reconstruct? Are we going to decide? Or already decided and given, we are going to pass journal entry. Already they would have decided and given. You just pass journal entry and prepare what? Balance sheet. We'll go to the journal entry later. Look at this. They would have given like this. The following scheme of reconstruction is sanctioned. Fixed asset to be written down by 33%. Current assets to be revalued by 27 lakhs. Preference shareholders forego arrears of dividend. Taxation liability to be paid at 3-4 lakhs. Some creditors decided to forego how much? 50% of the claim. Interest rate is increased to 11%. Old debenture holders 100 rupees debentures they surrender and they get fresh debentures for how much? 75. Equity shareholders and preference shares are reduced to what? 5 rupees and what? 75 rupees. Old values 10 rupees, 100 rupees, they forego. Like that they will give you. Already they would have decided and given. Already they would have decided and given which one? What has to be done? What has to be done? We have to just pass what? Journal entry and prepare which one? Balance sheet. So internal reconstruction, we are not going to learn about legal points. Okay, in company law, you will be learning about internal reconstruction is discussed as capital reduction. Is discussed as which one? Capital reduction. You will learn in company law. We have to convene shareholders meeting, equity shareholders meeting, and get the approval through special resolution. You have to prepare the scheme of internal reconstruction, give it to the shareholders, and get the approval through which one? Special resolution. Lot of other legal formalities are there. I'm not going to legal formalities that you will learn in which one? Company law. In the classroom, what we are going to do is how to account for internal reconstruction. But before we go for internal reconstruction, do you understand what is internal reconstruction? It is for loss-making company to write off the losses. We forego the liabilities. We forego which one? Liabilities. Start. Have the organized note. Heading internal reconstruction. It is a process. It is a process of capital reduction through which a loss-making company writes off past losses. It is a process of capital reduction through which a loss-making company writes off which one? Past losses. If you understand the concept, journal entry is very simple. For reduction in liability, it is also known as which one? It is also known as which one? Waiver of liability, otherwise called as which one? Liability foregone. Simple. We are going to develop accounting entry. Liability will have which balance? Credit balance. When you want to close it, debit. Pass the entry. Liability account debtor. Liability account debtor to capital reduction account. We will open an account called as which account? Capital reduction. It is also called as reconstruction account. For reduction in liability, liability account debtor to which account? Capital reduction account. Why are you debiting liability? Liability will have a credit balance. We debit. For example, equity shareholder forego 90% na, equity share capital to capital reduction. Preference shareholder forego 20% na, preference share capital to capital reduction. Unsecured creditors forego 10% na, unsecured creditors to capital reduction. If debenture holders forego something, debentures account debtor to which account? Capital reduction. That's what. Debit the liability to which account? Capital reduction. Yes, or credit pandringana, profits will be transferred to which account? Profits will be transferred to capital reduction account. Credit all the gains. B. For conversion of liabilities. What do you mean by conversion of liabilities? For debenture holders, we will give equity shares. For unsecured creditors, we may give preference share. Preference share, we will convert to equity share. Okay, we will exchange. We will ask them to exchange. If they agree, we will exchange. What is entry you will pass? Old liability account debtor. Old liability account debtor, which can be debentures or loans, or it can be creditors. Okay. To new liability. What do you mean by new liability? It can be shares given or debentures given. Debit old liability to new liability account. The balancing for will be transferred to which account? Capital reduction account. If there is a profit, you will transfer to capital reduction account. So if the liability is reducing, what is the entry we'll pass? Liability account data to which account? Capital reduction account. If the liabilities are converted, what is the entry we'll pass? Old liability account data to new liability. Okay, the new liability is nothing but the new shares, debentures, etc. given to them. If there is any profit in conversion, we'll transfer to which account? Capital reduction account. Now, is there a chance of increase in liability? Is there a chance of increase in liability? Our company is in loss for the past 5 years or 10 years. For this company, is there a chance of increase in liability? For example, to the employees, we have not paid salary. We have not paid salary, or we have not provided bonus. We have not provided bonus. We will sit with the trade union, negotiate with the trade union, and say we'll agree for a bonus of 5 lakhs, 10 lakhs, 20 lakhs, and the money. So, what is the entry you will pass? For increase in liability, if any, that is, it may be unrecorded liabilities also. What do you mean by unrecorded liabilities? So far in the balance sheet is not recorded, but we are going to record it now. What is the entry you will pass? New liability, is it a gain or loss? இது வரைக்கும் நான் ரெக்கார்ட் பண்ணல சார் liability, இப்போ ரெக்கார்ட் பண்ண போறேன். Or there is an increase in liability, is it a gain or loss? Paying more is a loss. Paying more is a loss. We'll debit to capital reduction account. Capital reduction account data or to the liability account. The liability can be anything. Liability can be creditors. It may be workman compensation. Or it can be even PF or ESA or gratuity or bonus, anything. It can be anything. Any new liability. Once again, for liability reduced, what is the entry? Liability account data to which account? Capital reduction account. If you convert liability, cancel old liability, bring the new liability like shares, debentures, any gain goes to which account? Capital reduction account. If we find if there is any increase in liability, it's a loss for us. Capital reduction account data to which account? Liability account. Next. Using all these things, what will you do? To write off assets, losses. We'll use it for write off which one? Assets and losses. What is the entry to pass? Capital reduction account data. Compulsory, we have to write off which account? Profit and loss account, debit balances. Profit and loss account, that accumulated loss. We'll write off. All the miscellaneous expenditure we have to write off. What do you mean miscellaneous expenditure? Company final accounts format பார்க்கும்போது discuss பண்ணியிருந்தோம். என்னது? Preliminary expenses, discount on issue. We call it as fictitious assets. Discount on issue. Then underwriting commission. Bonus issue கிடையாது. That's normal share capital. Underwriting commission. All those things will have no value. That must be eliminated. Which must be eliminated? Miscellaneous expenditure to be eliminated. To other assets, if any. If any other assets to be written off, write off that also. Capital reduction account data. Why are you debiting? Writing off the asset, is it a gain or loss? Asset a rate of panna, the gain or loss? Loss. To P&L account, miscellaneous expenditure, any other assets. Is there any chance of increase in asset? Is there a chance of increase in asset value? Are you taking up along with? I repeat, pay attention. Reduction of liability. Why are you debiting liability? Liability will have which balance? Credit balance. அது forego பண்றாங்கன்னா debit பண்ணு. Liability to capital reduction. To convert liability, debit old liability to new liability, whatever is exchanged, the balance will go to what? Capital reduction. If there is any increase in liability, that is a loss for us. Capital reduction to liability account. To write off losses, assets and all, debit to capital reduction with all the assets to be written off. Is there a possibility for increase in assets? Yes, your company may be in loss, but let us assume you purchased land about 20-30 years back. At the time you would have purchased land for 1 lakh. Today it may go for 1 crore. Clear? So asset can increase. Take up the entry. Asset account data to which account? Capital reduction account. Why are you debiting assets? Assets will have debit balance. When you want to increase it, debit further. Debit further. Asset account data to which account? Capital reduction account. Reconstruction, will there be expense or there will be no expense? Expense will be there for reconstruction expenses. For reconstruction expenses, capital reduction account data to which account? Cash or bank account? Expenses will be debited to capital reduction account. Expenses are debited to which account? Capital reduction account. Now all are over. Everything is closed. You find and you prepare capital reduction account. You can find and prepare which account? Capital reduction account. You are preparing, let us assume. Credit, you find 50 lakhs is there. And debits, you find losses, etc. written off to the extent of 40 lakhs. What will you do with the balance 10 lakhs? Credits 50 lakhs, debits 40 lakhs in the form of writing off assets, losses, etc. is there. There is a balance of 10 lakhs in capital reduction account. What will you do with that? Or balance in which account? Capital reduction account. We'll transfer to capital reserve. We'll transfer to which account? Capital reduction account. Data to which account? Capital reserve account. Why? Because it's a capital profit or revenue profit. It's a capital profit as per company law. The profit will be transferred to which account? Capital reserve account. Take up this. So these are the 7 or 8 base entries that will come in any exam question. Additional entry possible. They may go for a bank loan. They may tell that the company goes for a new bank loan. What is the entry you will pass? Bank account data to loan account. Or they may say the company is issuing new preference shares. Bank account data to equity share capital or preference share capital and the mari. But these are the base entries for solving any internal reconstruction question. The concept, what is the concept of internal reconstruction? The company is in a profit or in loss? Loss. We want to write off the loss and assets necessary. For that we are altering capital. Which capital? Equity capital, preference capital, debentures, both borrowed money as well as what? Shareholders money we alter. For that we pass the entry. We pass the entry. Once again, I recollect, recap and go through. Liability reduce what is the entry for reduction in liability? Liability account data to capital reduction. For conversion of liability, cancel old liability, bring the new liability, balance if any will go to what? Capital reduction. To increase liability if any, it's a loss for us. Debit all the losses to liability account. To write off losses, debit all the losses to capital reduction. It may be P&L account, miscellaneous expenditure and which one? Other assets. If there is any increase in asset value, asset account data to which account? Capital reduction account. If you spend any money in the process of capital reduction, you appoint a financial consultant to talk to the people, legal expenses will be there. What is the entry you will pass? capital reduction account data to cash or bank. For the balance in capital reduction account, it is transferred to which account? Capital reserve account. That's all. Conceptually, it is over. We have to just practice questions. We have to practice what? Questions. We'll see. Come to your material or just see the screen, that is sufficient. Following is the balance sheet of which company? Yes Limited as on 31st March 2023. 13% preference shares of how much each? 100 each. எவ்வளோ கொடுத்துருக்காங்க? 1 lakh. Equity shares of 10 each. 7 lakhs is given. Then we are given debentures, current liabilities and provision for tax. Fixed assets, current assets. You can find P&L account appears in which side? Asset side. Asset side. Normally P&L account எந்த சைடில் வரணும்? P&L account should appear in which side? Liability side. Balance sheet la endha side la kaatnu neenga? Liability side la. But in this balance sheet, it is shown in which side? Asset side na debit balance no artham. What do you mean by debit balance? Loss. It's a loss. Look at the following scheme is given to you. Fixed assets are to be reduced by 33.1/3%. What do you mean by 33.1/3%? 1/3. 15 lakhs la they ask you to write off what? 1/3. Current asset 35 lakhs given, revalued at 27 lakhs. Preference shareholders, forego right of arrears of dividend which are in arrears for 3 years given. Taxation liability of the company settled at how much? 4 lakhs is given and the same is paid immediately. Look at taxation liability, how much is given? 3 lakhs is the taxation liability. But how much we are paying? Balance sheet la 3 lakhs aanga irukku. But we have to pay how much? 4 lakhs. Paying more is a loss or gain? Loss. We have to record that. One of the creditors of the company to whom we owe how much? 25 lakhs. Decided to forego what? 50% of the claim. That person is given 1000 shares of I each in part satisfaction of the remaining balance of the claim. Rate of interest is increased to 11%. Debenture holders surrender their old debentures and get the new debentures for how much? 75 each. Existing equity and preference shareholders are reduced to 5 each and 75 each. Look at the old capital. Look at the old capital. எவ்வளோ இருக்கு பாருங்க. Preference shares old capital how much? 100 rupees. Adjustment என்ன சொல்லியிருக்கோம்? 75 each. Look at the equity share capital. How much is given? 10 each. Look at the adjustment. 5 each. There is a reduction of share capital. There is a reduction of share capital. We have to pass entry. Now we can combine entry number A and B. We can combine entry number which one? A and B. Why? Because fixed assets are written off, then current assets also what? Written off, which is compulsory to write off. P&L account is an accumulated loss. We must write off. We must write off. Combine money or entry of pass பண்ணிடலாம். Okay. So we are going to do it together. We are going to do it together. Start. Question number 1. Question number 1. What is the first entry we'll pass? An entry pass பண்ணுவீங்க இதுக்கு. To write off assets, an entry pass பண்ணும். Writing off asset, is it a gain or loss? Loss. What is the entry will pass? Capital reduction account data or capital reduction account data or to which account? Fixed assets account to current assets account. To which account? P&L account. Compulsory. This is compulsory. Even if it is not given in the question, you must write off the P&L account compulsorily. Fixed assets, how much they ask you to write off? 33.1/3. Percentage is nothing but 1/3. It is nothing but 1/3. 33.1/3%. 33.33333 no. Nothing but 1/3. Tell me the amount. Look at the balance sheet amount. Balance sheet amount எவ்வளோ இருக்குங்க? 15 lakhsல 1/3 போட்டு என்ன வரும்? 5 lakhs. Current asset balance sheetல 35 lakhs கொடுத்துருக்காங்க. Revised value 27 lakhs. 8 lakhs. P&L account must be written off. P&L account must be written off 3 lakhs. Debit the loss. Writing off assets. Writing off assets is a loss for us. Being fixed assets, Current assets and the profit and loss account are written now. You must write narration. In the exam, you must write a proper format. Particulars, debit, credit, all those things you must write and do the journal entry. Shall we? Any doubt in the journal entry? Why are you debiting capital reduction account? Writing of assets. Assets write up, is it a gain or loss? Loss. Credit the assets. Assets will have debit balance. To write off, we credit. Next part. What is the next one given? Preference shareholders decided to forego the right of arrears of dividend which are in arrears for 3 years. Preference shareholders forego the right of arrears of dividend which are arrears for how many years? 3 years னு கொடுத்திருக்காங்க. Who are they? Preference shareholders. What do? Forego right of arrears of dividend which are arrears for how many years? 3 years. What entry you will pass for this? First question is it given in the liability side of balance sheet? Liability side of balance sheet la da irukka? No, it is not said it is included in current liability nu solla. Don't assume, okay. If it is there, they should have given. It is not included in current liability. Is it recorded as a liability already? No. Is it payable or foregone? Foregone means not payable. Number one, it is not recorded as a liability. Number one. Number two, is it payable now or not payable now? Not payable now. What entry will pass? No entry required. No entry required. It is not a recorded liability. It is an adjustment cancelled. Adjustment la da pannanum sollina pannalam. Adjustment la da dividend is given. They tell that it is cancelled. So no entry required for that. Start. For point number C. Arrears of dividend. Please note, arrears of dividend was not recorded in balance sheet. Okay. It is cancelled. It is cancelled. So no entry required. Arrears of dividend balance sheet will record panla sir. If it is payable, there is a loss. Okay. If arrears of dividend is not recorded in balance sheet, that is cancelled now. No entry required. That is for point number C. Next. What is the next one? Taxation liability of the company is settled at how much? 4 lakhs in kuduthirukkom. Look at the balance sheet. It is a recorded liability. What is the provision for tax given in the balance sheet? 3 lakhs is given to us. 3 lakhs is given to us. But how much we have to pay? 4 lakhs we have to pay. We are paying more. We are paying more. What is the entry we'll pass? Provision for tax account debtor. Pass the entry along with me. No need to wait. Provision for tax account debtor. How much is already given in the balance sheet? 3 lakhs. To cash or bank. How much we have to pay? 4 lakhs. Adjustment la kuduthirukkom 4 lakhs. We are paying excess. That will be adjusted with capital reduction account, not P&L account. In the process of any capital reduction, in the process of capital reduction, any gain or loss, it will be adjusted with which account? Capital reduction account. The excess payment will be adjusted with capital reduction account. If you are paying more than the recorded liability, it's a loss. That loss will be adjusted in which account? Capital reduction account. Provision for tax account debtor 3 lakhs, but we are asked to pay 4 lakhs. excess amount is adjusted with which one? Capital reduction account. Of course, your trade narration in the exam, classroom purpose, it is okay. Done. Next paranga. What is given next? One of the creditors of the company who owes 25 lakhs decided to forego how much? 50% of the claim. So, when liability is foregone, what is the entry will pass? Liability account debtor. Liability account debtor. Creditors account debtor. How much they forego? 50% of the claim. To capital reduction. 25 lakhs la எவ்வளோ forego பண்றாங்க? 50%. Wait பண்ணுங்க. And we are giving shares to equity share capital. Look at equity share capital. How many shares are given? 1 lakh shares of 5 rupees each in part satisfaction of the remaining claim. 5 lakhs thorough. Look at the words. Is allotted. Is allotted what? Is allotted. What is given? Is allotted 1 lakh equity shares of 5 each in part satisfaction of the balance claim. So simple. You forego 50%. You get 5 lakh of shares now. Total how much? 17 lakh 50,000. Once again, how to capital reduction 12 lakh 50,000? It's clearly given. They forego. How much they forego? 50%. They are given 1 lakh shares of I each in part satisfaction of the balance of claim 5 lakhs. Total is 17 lakh 50. Next part. What is given next? What is given next? Rate of interest is increased to how much percentage? 11%. Look at the debentures and balance sheet. 8% debentures 3 lakhs irukku. 8% debentures 3 lakhs irukku. It is going to become how much? 11% debentures. Old debenture holders surrender 100 rupees debentures and they exchange the same for how much? 75 each. So listen, 11% debentures account debtor. 11% debentures account debtor. எவ்வளோ old debentures இருக்காங்க? 3 lakhs. Oh, sorry. 8% debentures account debtor 3 lakhs. We are giving 11% debentures. Are we giving for the full value? No. 3 lakhs into 75 rupees for every 100 rupees. Look at the adjustment. We are giving how much? 75 each for every 100 rupees. So how much we have to give? 3 lakhs into 75 by 100 putting now, how much you will get? 2,25,000. So balance will go to capital reduction. Okay, 8% debenture holders get 11% debentures for 2,25,000. The balance is a profit to us. It will be transferred to which account? Capital reduction account. Let's assume you are all debenture holders holding 3 lakhs of debentures. You are accepting 2,25,000 now. The balance will go to which account? Capital reduction account. Look at the next one. Last one. என்ன கொடுத்திருக்கோம்? Equity shares and preference shares are reduced to 5 each and what? 75 each. Look at equity share capital and preference share capital. Old balance எவ்வளோ இருக்கு பாருங்க. Old balance. What is old equity share capital? Look at the question. Look at the question. Equity shares. Old equity shares எவ்வளோ இருக்காங்க? 7 lakhs, 10 each. 10 each, 7 lakhs. The preference shares are what? 100 each, 1 lakh. So 7 lakhs equity is there. Preference shares, how much is there? 1 lakh. It is reduced to 5 each and what? 75 each. Old is 10 each and what? 100 each. So ரொம்ப simple. 7 lakh divided by 10. 7 lakh divided by 10, how much it will be? 70,000 shares. It is going to be 70,000 into 5 rupees. 70,000 into 5 rupees. 7 lakh divided by 10, 70,000 shares. It's going to be 5 rupees value. It will become how much? 3,50,000. 1 lakh divided by 100. 1 lakh divided by 100, how many shares will be there? 1 lakh divided by 100, 1,000 shares. It is going to become how much? 75 rupees each. 75,000. Once again, repeat. Old value 10 each, 7 lakhs, 100 each, 1 lakh இருக்கு. Reduced to என்ன சொல்லிருக்காங்க? 5 each and 75 each. What do you mean by 5 each? 7 lakh divided by 10. How many shares are there? 70,000 shares are reduced to 5 each. 3,50,000. This will be 1 lakh divided by 100. எவ்வளோ shares இருக்கும்? 1,000 shares reduced to 75. So what is the reduction? Reduction. What is the reduction? 7 lakhs becomes how much? 3,50,000. And 1 lakh will become 75,000. This reduction is a gain for us. ரொம்ப யோசிக்க வேணாதுல. Very simple. 10 each வந்து 7 lakhs na 5 each என்ன இருக்கும்? 10 each you are holding 7 lakhs means 5 each means half the amount. How much it will be? 3,50,000. So how much you are reducing? 3,50,000. Preference shares 100 each if it is 1 lakh. 75 each it will become 75,000. How much you are reducing? 25,000, for which we can pass a combined entry. It's a profit or loss? Profit. Equity share capital account data. How much they forego? 3,50,000. Preference share capital account data. Preference share capital account data. How much they forego? 25,000 to capital reduction account. Equity shareholders forego this much. Preference shareholders forego this much. So total is a profit for us. Reduction of liability, is it a gain or loss? Reduction of liability, is it a gain or loss? Gain for the company. That's why we transfer to which account? Capital reduction account. Take up this. Don't memorize any journal entry. Apply logic and apply. Why are you debiting capital reduction in the first entry? Writing off fixed asset, writing off current asset and P&L account. If assets are written off, is it a loss or gain? Loss. So debit to capital reduction. Capital reduction account data to assets account and P&L account. Arrears of dividend was not recorded in balance sheet. When arrears are not recorded in balance sheet, when something was not recorded in the balance sheet, if it is cancelled, no entry required. Provision for tax is only 3 lakhs, but we pay 4 lakhs now. Excess is a loss for us. Loss will be debited to capital reduction. Creditors forego 50%. Creditors forego 50%. When creditors forego, it's a gain for us. They are also given shares. They are also given shares. So total adjustment 17 lakh 50. 8% debentures become a much? 11% debentures, but not for the same value. For every 100, we exchange 75. 2,25,000. Balance goes to capital reduction. 10 each capital 7 lakhs now. 5 each capital will be 3 lakh 50. Reduction is how much? 3 lakh 50. 100 each capital is 1 lakh means 75 each capital will be 75,000. Reduction is 25,000. Debit the liability. Equity share capital and which one? Preference share capital to which account? Capital reduction account. Now, there are two methods. One is you can prepare the capital reduction account or debit credit method. Let's check pannalam. Capital reduction. இங்கெல்லாம் ரெக்கார்ட் பண்ணியிருக்கோம் இல்லையா? இங்கெல்லாம் கேபிட்டல் ரிடக்ஷன் பண்ணியிருக்கீங்களோ டெபிட் மைனஸ் கிரெடிட் மெத்தட்லேயே செக் பண்ணலாம். Add up all the debits minus all the credits and see. $16 lakhs, 1 lakh, minus 12 lakh 50,000, minus 75,000, minus 3 lakh 75,000. எவ்வளோ பேலன்ஸ் வந்துச்சு? டெபிட் பண்ணதெல்லாம் ஆட் பண்ணுங்க, கிரெடிட் பண்ணதெல்லாம் லெஸ் பண்ணுங்க. 16 lakhs plus 1 lakh. How much? 17 lakhs. 12 lakh 50, 75,000, 3 lakh 75,000. Credit இருக்கிறது 3 amounts. 12 lakh 50, this 75,000, this 3 lakh 75,000. What is the total? 0 ஆயிடும். Otherwise, plus எனக்கு இது கன்ஃபியூஸ் இருக்குன்னா, have you taken up the journal entry? தெரிஞ்சுங்களா அது? We can prepare capital reduction account. We can prepare which account? Start. Capital reduction account. Please start along with me. Capital reduction ledger account. Capital reduction account prepare பண்ணலாம். First entry to fixed asset. Fixed assets account எவ்வளோ வரும்? First entry. Fixed assets. First entry பாருங்க எவ்வளோ இருக்கு? Fixed assets 5 lakhs. To current assets. Current assets account how much? Current assets account how much? 8 lakhs. To P&L account. P&L account. First entry லே போட்டிருக்கோம். How much? 3 lakhs. Then to cash and the tax paid. Extra எவ்வளோ tax pay பண்ணிருக்கீங்க? 1 lakh. Then by creditors. Creditors the போட்டிருக்கோம் பாருங்க 12 lakh 50,000 creditors by what is the next one? Debentures. Debentures. Look at this entry. To capital reduction. How much we have put? 75,000. The capital reduction account alone 75,000. Just post and ledger. By equity share capital. In entry la பாருங்க. Equity share capital how much? 3,50,000. By preference share capital. Preference share capital. How much is credited? 25,000. This account tallies. I hope this account tallies. If there is a balance, what you would have done? You would have transferred to capital reserve account. This account tallies as it is. There is no balance. There is no balance. First entry to fixed assets, current assets, P&L account. Tax, excess tax paid and the 1 lakh extra pay பண்ணிருக்கோம். This one, capital reduction account data excess. 1 lakh is paid. Then creditors, forego 12 lakh 50. Debentures or 75,000. Debentures 75,000. This one, equity share capital, preference share capital. This account tallied. Suppose if there was any surplus, you would have transferred to capital reserve. There is no surplus in this first. The answer is not over. Answer is not over. Look at the last line of the question. Prepare balance sheet after internal reconstruction. First entry doubt irka? Capital reduction to assets. Tax we pay more, excess adjusted with capital reduction. Creditors forego, adjust with capital reduction, we give shares for them. Then 8% debentures becomes what? 11% debentures, and prepare which account? Capital reduction account. Then old equity shares, preference shares are reduced. We adjust that. Then we prepared a capital reduction account, no balance left. Next we are asked to prepare what? Balance sheet. Old balance sheet, after adjustment we have to prepare the new balance sheet. Have we taken up capital reduction account? Pay attention. We will prepare the balance sheet. For that we have to do the workings. What is working number 1? Listen, I'll give you sufficient time to copy. Pay attention. What is the working note number 1? Working note number 1, share capital. Share capital parunga. Old equity share capital எவ்வளவு இருக்கு balance sheetல? 7 lakhs. Less reduction. Reduction எவ்வளவு பண்ணிருக்கோம்? 3,50,000 we have done. So balance 3,50,000 will come. And please remember, equity share capital we have given to creditors. We passed one entry also. Check the entry. Look at this entry. Creditors account data are to what? Equity share capital we have given them. How much we have given them? 5 lakhs we have given them. So old equity share capital after reduction plus we have given to creditors 3,50,000 plus 5 lakhs in our 8,50,000. This is equity share capital. Preference share capital. Preference share capital. What is the preference share capital amount? 1 lakh reduced by 25,000. How much will come? 75,000. We passed entry also. Look at this. 1 lakh reduction. New value becomes what? 75,000. Reduction is 25,000. New value is 75,000. So what is the total? Share capital. Any other share capital? No. So 8,50,000 equity share capital plus preference share capital. 8,50,000 plus preference share capital 75,000. Total and over 9,25,000. That is your share capital amount. Any reserves and surplus given in the question? No reserves and surplus given in the question. No application money pending allotment also. Any long-term borrowing given in the question? Yes. Debentures. But debentures are converted. Journal entry pass பண்ணிருக்கோம் பாருங்க. Listen. 8% debentures became what? 11% debentures for how much? 2,25,000. So it will become like 11% debentures. 11% debentures for which amount? 11% debentures for 2,25,000. 2,25,000. Then comes which one? Current liabilities. Current liabilities. Check the current liability.
39 lakhs.
39 lakhs. 39 lakhs given in the balance sheet. But look at the journal entry. How much we adjusted? Creditors. எவ்வளோ டெபிட் பண்ணியிருக்கோம் பாருங்க இங்கே 12,50,000 in the form of reduction. Equity shares given 5 lakhs. What is the total reduction? 17,50,000 we have adjusted. 39 lakhs 17,50,000 we adjusted. So balance will come 39 lakhs minus 17,50,000. Balance will come. Okay, wait. Non-current assets, fixed assets, revised value given 15 lakhs minus on the 1/3 rate up பண்ணமே. Fixed assets 15 lakhs. Look at the journal entry. First journal entry we have written off how much? 5 lakhs. So we can directly do that. Fixed assets 15 lakhs minus 5 lakhs. 15 lakhs minus how much written off? 5 lakhs written off. How much it will become? 10 lakhs. Then current assets, wait பண்ணுங்க. Current assets, what is the revised value given? Revised value 27 lakhs. அதில் tax pay பண்ணியிருக்கோம். Tax paid. Current assets include bank balance இல்லையா? Tax paid 4 lakhs. So 27 lakhs minus 4 lakhs. How much? 23 lakhs. Total 33 lakhs. 10 lakhs plus 23 lakhs. 33 lakhs. I repeat. Equity share capital, old balance 7 lakhs, reduction 3 lakh 50, balance 3 lakh 50. Equity share capital given to creditors. What is equity share capital given to creditors? 5 lakhs. Preference share capital after reduction 75,000. What is the total share capital? 9 lakh 25,000. Non-current liabilities, debentures 11%, 2 lakh 25,000. Current liabilities are reduced and adjusted to the extent of what? 17 lakh 50. Balance will come. Then non-current assets, fixed assets 15 lakhs minus 5 lakhs, 10 lakhs. Current assets revised value minus tax paid, you get how much? 23 lakhs. Total how much? 33 lakhs. When you come for the next class, ensure that you are revising the notes and come for the next class. Because if there is a continuous class, the continuous mindset will be there. But if there is a gap, okay, we learn one subject, then we learn next subject, again we come back to the subject now, you have to recollect and come. Okay, especially the journal entries alone, please recollect and come. This chapter, since it is important for 10 marks, I have given about 10 questions, about 8 to 10 questions for classroom practice. At home practice, I have given about 8 to 10 questions with solution. With solution I have given. Apart from that, we have to refer what? ICI material.